Okay, let's take a look at the June transactions and see what was done with those. So here starts the June transactions, okay, and the very first one is on June the 5th, and materials are issued, that is lumber. Requisition, whenever we issue materials out of the material storeroom, that means we got a requisition for it. So requisition 610 for job 100 is $13,000. Okay, requisition 611 was $768.50 for job 121, 612 for 132, 630.50. Okay. Requisition 612 also shows 3105 of weather stripping, shingle cement, and wiring. So these are all things. Lumber is a major direct material, whereas this weather stripping, shingle cement, wiring stuff, these are all indirect materials. And so we need those to go to the indirect materials part of the overhead analysis sheet. Okay, so let's take a look first at putting this on the T accounts. Okay, so we have 13,000 of lumber, 768.50 of lumber, 630.50 of lumber. So let's add those up. And there's 768.50 and 630.50. So that's 14,399. Okay, so we're going to take a look. Here are the June T accounts. So actually they ended up putting in separately. So here's where they're coming out of the materials. They got issued from the materials. So 13,768.50, 630.50 coming out of the materials and going into work in process, because these materials are direct materials that are going onto the factory floor. Then we had the indirect materials, which are also coming out of the material storeroom, the 3105. But notice they're not in work in process because they're indirect materials. They are down here in the overhead, 3105. So now I've put my debits and credits onto my T accounts. The next part is to go into the subsidiary ledgers. I have to go into my materials ledger. All three of these were lumber. So I have to go into the lumber subsidiary ledger. And this 3105 was indirect materials, which typically would still have each one. There would be one for the shingle cement, one for the wiring, etc. But for purposes of this project, we just have one called indirect materials. Okay. Then we have to go to the job cost sheets, which are the subsidiary ledger of work in process. And we have to put in each of these lumber amounts into a job cost sheet. Now notice the job cost sheets are subsidiary to work in process. So only the stuff that goes in work in process is going into the subsidiary ledger, the job cost sheets for each job. So the indirect materials are not on here, so they're not going on to the job cost sheets. Okay, here we have our subsidiary ledgers, okay, and you will see, let me see if I can. You can see that we have the overhead analysis sheet, finished goods ledger, job cost sheets, and this one is the materials ledger. So we'll start with the materials ledger. Okay, and here the first one is lumber. Okay, and so here we had the beginning balance of lumber was $20,000. Now we put in the date, June the 5th. The reference number is whatever document number, if we have one. In this case, we have a requisition number 610, and we have a column for any lumber that we received, that we purchased and received, or we have another column for the lumber that we issued out of the material storeroom. So 13,000 was issued out. We originally had 20,000 of lumber. When we issued it out, that means it's gone. So we have to subtract that 13,000. Our balance is that we only have 7,000 left. Then on the same day, June the 5th, requisition 611, we had 768.50 be issued. So that has to be subtracted. That gives us 6231.50 in the balance. And then also on June the 5th, on requisition 612, we had 630.50 cents be issued, and that brought us down to 5601 for lumber. Okay, then we also had the indirect materials that went out. That's down here at the bottom. We had 3304 to start with, and on June the 5th, on requisition 612, we issued out 3105 of indirect materials. That brought us down to a balance of $199 left of indirect materials. All right, so that was our indirect materials. Now we have to go to our job cost sheets, and we have to put these amounts onto the particular jobs. Now here's job 121, which is a job that started in May, okay, and job 100, okay. Now, job 100 is the job that we used the 13,000 of lumber. Now, these job cost sheets, just like we've looked at in the past, they have a direct material section, a direct labor section, and our applied overhead section. Here's our summary, and this also is part of the summary over here. Okay, notice that the summary is blank because we haven't finished this job yet. Okay, so here's the balance from May of direct materials, 2021.72, that we've put onto this particular job. Now on June the 5th, we put in the date, the requisition number, R610, and that was $13,000. Okay, here's requisition on June the 5th, requisition 612 on job 132 on $630.50 of lumber that got added in there. This was a job that didn't start until June, so there is no beginning balance. Okay, here's some various blank job cost sheets, okay, of jobs that don't start until July. Okay, and we had here's our, this was the first job, 121, and we had requisition 611 on June the 5th of 768.50 of lumber, which is a direct material. And we did have a balance from May that we started out with. Okay, so we've now put in all the direct materials into our job cost sheets, and we put it the issued parts into our material subsidiary ledgers. So we're now done. We're not totally done. We have our overhead analysis sheet. overhead analysis sheet, okay, because we had the indirect materials, and so we put in, here's the overhead analysis sheet. This is for the month of June. So we put in June 5th, the date, and we put in the amount, the total amount, which is $3105. Then we got to break that down into what kind of stuff that was. So indirect materials, indirect labor, depreciation, repairs, utilities, insurance, or other types of taxes. So this was indirect materials, so we're also putting the 3105 into that overhead analysis sheet. Okay, so that takes care of this one on June the 5th. Okay, and go to June the 8th. This is materials that were returned, and there's a credit memo. So, it wasn't returned until after it was requisitioned. So this is a little bit more complex, and I do not have that in July. I'm going to skip that for right now. On June the 15th, we purchased materials on account from John R. Lumber. We got lumber of $15,000, wiring of $4349.02. There's the invoice JR 4890. We also got building repair services of $798.32, and that was invoice B312. That would have come from a different company. Okay, so let's do this lumber. We purchased lumber of $15,000. Okay, and wiring of $4349.02 from John R. Lumber. So when we purchase materials, we're debiting materials, and we credited accounts payable. But again, as I said in the previous video, these T accounts are only the T accounts for inventory related stuff. So I have no T account for accounts payable. So here's the $15,000 and the $4349.02 that we got from John R. Lumber that we purchased, debited into materials, but there's no credit for accounts payable on here. Okay, and again, in real life that wouldn't happen. Our debits have to equal our credits. Okay, so there those are. Now I have to go into, also we had $798.32 of building repair services. So those are not materials. That's a service on the building, repairing the building, something to do with it. And so that is an overhead cost. So that's down here. And we would have credited accounts payable for that too if we were in real life. Okay, so now we need to go to the materials, subsidiary ledgers, and we need to go to the overhead analysis sheet. Okay, here's our overhead analysis sheet. So on June the 15th, we had a total of $798.32 go into overhead, and it's under repairs and maintenance, the $798.32. So that takes care of that. We also have to go to the materials ledger, and we had purchased $15,000 on June the 15th of lumber. Okay, our previous balance was $56.01. Now we purchased $15,000. So we add that to the previous balance, and we now have $20,601 of lumber available. We also have to look at the indirect materials. We purchased $4349.02, and the previous balance was $199. So we have to add those two together. We now have $4548.02. So our subsidiary ledgers are now finished